In Florida, Trump said the U.S. is considering waiving oil-related sanctions and deploying the U.S. Navy to escort tankers through the Strait of Hormuz to stabilize global supply and bring prices down. However, uncertainty remains over shipping traffic through the crucial route, the Strait of Hormuz, which carries around 20% of the global oil supply. Now, finance ministers from the Group of Seven or G7 have agreed not to release strategic oil reserves for now, despite the recent surge in global crude prices. The ministers held an emergency telephonic conversation on Monday to discuss the spike in oil prices triggered by the US-Israeli war on Iran. In a joint statement, the G7 said it is ready to take necessary measures to stabilize global energy supplies, including the potential release of strategic stockpiles. However, officials said more analysis is needed before taking that step. A G7 official told Reuters there was broad consensus among members, with the debate centered mainly on the timing of any reserve release. The issue will now be discussed by G7 energy ministers today, followed by G7 leaders later this week, who are expected to take the final decision. Remember, the G7 includes the United States, Canada, Japan, Italy, Britain, Germany and France. Now, speaking after the Eurogroup meeting of finance ministers in Brussels, European Economic Commissioner insisted that G7 energy ministers do stand ready to release strategic oil reserves, but not yet.
We are seeing upward pressure on energy prices, and we discussed the types of measures that member states are considering, along with the need to remain coordinated in action while monitoring the situation on the ground.
We stand ready to release them. And we had a discussion indeed on US positioning on this, and also US is broadly aligned with this approach, and they were emphasizing what they were discussing in the case of India being, so to say, very much contained both in terms of time and scope of the measure, so they do not expect substantial impact of this on Russian oil revenues.
And staying with the oil story, well, oil is not well in West Asia. Egypt has raised fuel prices across a wide range of petroleum products, citing focus to India now amid ongoing geopolitical disruptions affecting global fuel supply. The hospitality industry in India has raised concerns over a shortage of commercial LPG cylinders, warning that supply disruptions are beginning to affect restaurants and hotels across the country. The Federation of Hotel and Restaurant Association of India has written to Petroleum and Natural Gas Minister Hardeep Singh Puri, highlighting what it called widespread disruption at the ground level. According to the association, several LPG distributors, in fact, are withholding supplies, citing a government order issued on March 5th, leading to difficulties for restaurants and food service businesses. In the letter, the FHRAI Secretary General Jason Chacko urged the government to clarify that no restrictions apply to the hospitality sector and asked for clear instructions to oil marketing companies to ensure smooth distribution of commercial cylinders. Meanwhile, the National Restaurant Association of India, or NRAI, also flagged the issue, saying suppliers are unable to meet restaurant demand, which is severely impacting food services and requires urgent government intervention. And taking into consideration the current situation, Union Petroleum and Natural Gas Minister Hardeep Singh Puri said the government has formed a 3-member committee of executive directors from oil marketing companies to review LPG supply requests from the hospitality and industrial sectors. In a post on X, Puri said the move comes as geopolitical disruptions have tightened fuel supplies. The government has directed refineries to increase LPG production, with additional output prioritized for domestic household consumption. Now, the new committee will review supply requests from restaurants, hotels and other industries as well. Now, the Ministry of Petroleum and Natural Gas has also directed oil refineries to ramp up LPG production and channel the additional output towards domestic household consumption. Now, this move comes as authorities seek to stabilize supply and ensure uninterrupted access to cooking gas across the country. The ministry has also introduced a 25-day inter-booking period for LPG cylinders to prevent hoarding and curb potential black marketing. Now, at the same time, imported LPG supplies are being prioritized for critical non-domestic sectors, including hospitals and educational institutions, to ensure essential services are not disrupted. Now, for other non-domestic users such as restaurants, hotels and industries, the government has set up a 3-member committee of executive directors from oil marketing companies. The panel will review requests and decide on LPG allocations based on urgency and availability. Meanwhile, government sources say that India's petroleum supply remains stable with adequate stock and no immediate reason for panic. Sources also clarified that petrol and diesel prices are not expected to rise in the near term, and there is no proposal to cut duties on petroleum products, including petrol and diesel, at this stage. Now, India currently has sufficient reserves of crude oil and aviation turbine fuel, or ATF, and every petrol pump across the country is operating normally as per government sources. Officials say India remains better positioned than many countries, with several neighbors including the Philippines, Mauritius and Bangladesh seeking fuel supplies from New Delhi. Now, sources in the Petroleum Ministry also say that India has adequate stocks of ATF, or aviation turbine fuel, and there's no shortage of aviation fuel in the country as well. Officials also say India is not only meeting domestic demand, but is also an exporter of ATF. Now, at present, there are no plans to halt aviation fuel exports, with authorities maintaining that supplies remain stable and the aviation sector has sufficient fuel availability. And commenting on the impact of the US-Israel-Iran conflict on the Indian economy, Axis Bank chief economist Neelkant Mishra warned that India remains highly vulnerable to rising energy prices. Mishra said that India imports nearly 50% of its dense energy needs, and a $50 increase that we saw yesterday in oil prices could have a $90 billion impact on the economy, likely distorting the balance of payments. Remember, oil prices cooled soon thereafter. However, Neelkant Mishra also added that the key question is how long the price shock lasts, noting that the surge in oil prices would be painful not just for India, but for the global economy as well. Listen in.
See, the first is that we are deeply vulnerable to energy prices. So we have we import 50% of our dense energy, whether it is in the form of oil or gas or fertilizer, edible oil. I think all of that exposure is very vulnerable at this stage. Every dollar per barrel is about $1.8 billion a year. So if you take in, say, a $50 increase in oil prices, we are talking about $90 billion of impact. So that's like more than 2% of GDP if oil prices stay here for 1 year. That means a significant distortion or disruption in the balance of payments. So there is now suddenly, if you have to pay $90 billion extra, suppose that it's only a $50 rise. I mean, it is quite possible as the stress builds up that these numbers can actually go higher from here. The oil prices, there's no denying that they can, in the near term, even going even higher from here. The question to ask is whether this will last for a year or will this last for a month. And I think the call there is that this is not just painful for India, it is actually painful for everyone, including the people who are involved in these battles. It is as much a problem for the West Asian oil producers whose oil is not able to come to the market, as it is for America, where there are midterm elections which are due later this year, and a number of the core support base of the American president actually have warned against these wars and getting involved in them.
And moving on to the skies now, amid the escalating West Asia conflict involving the US, Israel and Iran, Indian airlines are operating flights cautiously as airspace restrictions and closures continue to disrupt routes across the region. Now, Air India and Air India Express will operate a total of 60 flights to and from West Asian cities, including 32 additional non-scheduled flights connecting India with the UAE. On Tuesday alone, the two airlines will run 14 flights to and from Jeddah, while Air India Express will operate 14 services to and from Muscat. Now, the 32 additional flights will connect Indian cities with Dubai, Abu Dhabi, Sharjah and Ras Al Khaimah, subject to slot availability. Meanwhile, Akasa Air said select services to Jeddah will continue until March 31st, while flights to Abu Dhabi and Riyadh remain suspended until March 11th and Doha and Kuwait until March 15th. Indigo said it has operated over 165 flights carrying more than 22,000 passengers between India and West Asia in the last 5 days. And with that, we will slip into a very short break. But coming up on the other side of the break, stock markets have recovered significantly after the oil slip, which got the Sensex to tank almost 2,000 points yesterday. We'll have Kranti Bhatini on the show to decode the trajectory ahead for investors and for the stock markets. That and more on the other side of the break. You're watching Morning Brief at 9.
नितेश श्रीवास्तव जी सिर्फ 35 साल की उम्र में अचानक एक बीमारी से चले गए। उनकी टर्म लाइफ इंश्योरेंस के पैसे बच्चों की पढ़ाई और घर खर्च में काम आ सकते हैं। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 2 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 700 रुपए महीने से शुरू।
Volkswagen. 20 किलो में अकेला होगा, हर नहले पे दहला होगा। ड्रीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। We are the Tigers. साथ खड़ा है। We are the Tigers. गेम बड़ा है, dribble like a rap, pass, setting up the track, kick it hard in the ball, chuck there for the ball. We are the Tigers. Chuck there for the ball. We are the Tigers. Chuck there for the ball. Chuck there for the ball.
Welcome back. You're watching News 9. This is Morning Brief at 9. Time now to look at the stock markets across the world, how they performed after we saw that massive spike and then the cool down in oil prices. First up, let's begin with the US. Wall Street staged a late comeback on Monday after signs of the Iran war nearing a turning point. US markets recovered after US President Donald Trump suggested that the US-Israeli war with Iran could be approaching an end. Investors stepped in to buy beaten down shares, helping the major indices close higher by the end of the session. Take a look.
Wall Street stocks clawed their way back from a steep sell-off to close higher on Monday, notching a final hour rebound as U.S. President Donald Trump suggested that the Iran conflict could be close to ending. All three indexes staged a late comeback, with the Dow ending 0.5% higher. The S&P 500 gained more than 0.8%, while the Nasdaq rose almost 1.4%. Early in the session, oil prices reached their highest levels since mid-2022 due to constrained supply arising from shipping disruptions as the war on Iran entered its 10th day. That fed fears of a broader inflation spike until Trump predicted the war in the Middle East could be over soon, and after reports of a possible ease in sanctions on Russian energy. The uncertainty is fueling volatility that could persist, says Kevin Mon, President and Chief Investment Officer of Hennian and Walsh Asset Management.
Oil is moving markets, and until we see a tanker, or at least multiple tankers for that matter, pass successfully through the Strait of Hormuz unharmed, I think this volatility is going to stick in the markets. But I think that volatility will subside, at least as it relates to the Strait of Hormuz. The longer that strait stays closed, the more of an impact that's going to have on oil prices, the more of an impact that's going to have on investor psyche, the more of an impact that's going to have on global economic growth.
Wall Street's fear gauge, the VIX index of U.S. stock market volatility, jumped to its highest level since the tariff turmoil in April of last year. Semiconductor stocks bounced back, with SanDisk climbing more than 11% and shares of chip leader Nvidia advancing more than 2.5%. But bank stocks, including Wells Fargo and Bank of America, ended the session lower despite the broad market rebound.
So that's a kind of bounce back in U.S. stocks. Meanwhile, European markets moved in the opposite direction as energy prices rattled investors. Shares fell to their lowest level in more than 2 months as surging oil prices fueled fresh concerns about inflation in Europe. Take a look.
From airlines to oil, global shares slumped again on Monday as the US-Israeli war on Iran showed no signs of slowing down. European shares fell to their lowest in over 2 months as surging oil prices exacerbated inflation worries. The pan-European benchmark fell for a third session, down 2.3% in early trade. The index fell 5.5% last week, marking its worst week in nearly a year. Oil prices came off earlier highs in European morning deals, but were still up more than 15% at levels not seen since mid-2022. That's as some major producers cut supplies and fears of prolonged shipping disruptions gripped the market. Brent crude futures were up over 16% in early deals, on track for the biggest ever jump in a single day. Disruptions in tanker movements and rising security risks have already slowed shipping activity and left Asian buyers reliant on Middle Eastern crude, especially vulnerable because the crisis is unfolding around the Strait of Hormuz. Roughly 1/5 of the world's oil supply passes through the strait. In Europe, banks, which were at the epicenter of the sell-off last week, extended declines with a 3.2% fall, and in airlines, carriers Lufthansa and Air France-KLM fell 3.9% and 5.2% respectively. On the flip side, higher crude prices pushed energy and defense stocks higher.
All right, so a rise, or rather a reversal that we saw in US, and then of course stocks moving in the opposite direction in Europe. Now let's take a look at Asia. And remember, yesterday Asian markets were beaten down after oil started inching up higher. But this morning we are seeing both Nikkei as well as South Korea's Kospi pair some of those losses that were registered in trade yesterday. Remember, Japan's Nikkei 225 was down almost 7% in trade, and a similar number was reported by South Korea's Kospi. But this morning, a sharp recovery, at least in the South Korean benchmark index, which is up about 5% from yesterday's lows of about 6.5%. Meanwhile, Japan's Nikkei 225 also recovering at least half of the losses that it incurred yesterday. Good news coming in primarily from the entire Asian pack, where Hong Kong's Hang Seng index is also up about 1 3/4 percentage point, and Taiwan's TAIEX up about 1.5%. Meanwhile, Shanghai Composite Index is up just marginally. One would call it a gap up opening, pretty much mirroring how the Indian stock markets have opened this morning. So let's look at the Indian stock markets and pull up the Sensex and the Nifty. Mood check, Nifty 50 and Sensex both up about 0.5 percentage point. In fact, Sensex is up about 430 odd points from yesterday's close. Remember, yesterday it had gone below the 77,000 mark to about 76,800 odd levels. This morning we are seeing some sort of a recovery in that, in fact now inching closer to the 78,000 mark. Nifty 50 also up about 0.6 percentage point, up about 150 points from yesterday's 24,000 odd levels, right now trading at about 24,165. The small cap and the mid cap space performing better. It seems that some ease in supply of fuel and potential end to the Israel and US war on Iran could reopen shipping lines, and that is something that bodes well for India's exporters. Meanwhile, you look at the India VIX, the fear gauge, the India volatility index is also sharply down. At some point yesterday, it was reaching levels of about 24. This morning at about 21. So volatility is still high, much lower than yesterday. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are adding to the gains this morning. And well, it seems that pretty much the entire pack is in the green this morning, barring of course energy stocks. And these energy stocks are the ones where there is some sort of a correction. One can see Reliance is of course down about 1% or so. But beyond Reliance, ONGC and Coal India, a broad-based recovery is visible. IT stocks are absolutely flat this morning. In fact, we are seeing the banking stocks and and the consumer durables auto pack recovering in trade this morning. These two sectors were particularly hard hit yesterday. The banking sector is back. In fact, SBI, which was among one of the biggest losers on the Nifty 50 index yesterday, down about 5%, has recovered about 1% or so from yesterday's high. As we speak, the index has inched up. In fact, the scrip has inched up even higher. Maruti Suzuki, which was also down about 5% or so yesterday, is up this morning at about 3/4 of a percentage point. Let's pull up the energy pack now, and the energy pack, which includes the oil marketing companies, the likes of BPCL, HPCL, as well as IOCL. These were the stocks which were battered in trade yesterday, but we are seeing some recovery as far as the oil marketing companies are concerned. But remember, not a massive recovery, as the government has gone ahead and stated that there isn't likely to be a sticker shock to consumers buying petrol and diesel, and government is going to keep prices stable, which means higher import costs for oil marketing companies, but the same selling price squeezing their profitability. Let's move on now to our guest joining us this morning. Kranti Bathini, equity strategist at Wealth Mill Securities, joins us this morning. Good morning, Kranti. A good day to have you, where we are seeing some sort of a recovery in the markets. Yesterday, of course, was pretty much a bloodbath on the Lal Street, and in fact, not just on the Lal Street, in fact, across Asia. But this morning, things are looking a little better. How long will they continue to look better?
Karthik, good morning to you. As long as crude is in a comfortable zone, if we can see some kind of a consolidation in crude, and if the crude is sliding downwards, it can be positive for Indian markets by and large.
Okay.
If there is a spikes in the crude oil prices, that's definitely going to dent the economy and dent the earnings of the companies, and it's a big negative for the markets like India in a medium to short term perspective. So we need to be very much vigilant. We are witnessing some kind of a heightened activity in crude. Look at yesterday, the crude spiked around $120 per barrel. Today, thanks some kind of a comforting statements from the President Trump, now we are at around $90 per barrel. If the crude continue to slide further, definitely it's going to be positive for markets like India.
Where do you see the crude story really settling down? Because there were estimates, pessimistic estimates yesterday, that crude could touch as high as maybe $150 a barrel if this happens to be a prolonged war. But now we are seeing a sharp recovery, also coming despite the fact that the G7 has not yet directly agreed to release the additional oil which they're holding as their strategic reserve. So one was expecting that that oil prices would be in for some sort of a shock this morning, but not really as yet. So how do you make the overall scenario playing out right now, with a mix of Russian oil allowed to enter India and the global dynamics of oil markets, the disruption in Strait of Hormuz, sort of a question mark still looming large on that? How do you see the oil story pan out from here?
Karthik, it's $1 million question, but if you put a gun on my head in a point blank range and ask me to tell, definitely on a longer term basis, crude is in a bear market. And look at the historical charts of crude in the past 15 years. In 2007, there is a prediction that crude is going to hit a range of $250 per barrel. And it was watched by many of the global broking houses and research houses. For the matter of fact, next 12 months, the crude touched a range of $20 to $30 per barrel. From there onwards, the crude is in a negative zone. And when the Israel and Gaza and Iran tensions erupted 24 months back, okay, the crude was heading towards the similar range of $90 to $100 per barrel, and the market prediction was in the same zone. And with the recent tensions in the Middle East, crude looked and the prediction is again back to $150 per barrel. But today, we are back to again $90 per barrel. So we need to closely observe how the things are going to be, how these disruptions are going to create in terms of the supply chain is concerned. By and large, there is enough crude is available right now. And I have my clients who tend to visit Saudi Arabia for their business trips and taking the developments. The way this economy is shaping up, in a different way how these perennial orthodox countries shaping up their economy and changing their business models, mainly because they expect that the crude is going to be in a downtrend in the coming decades. That is the reason they want to diversify from the crude and oil incomes.
Okay.
So in a longer term perspective, the crude is in a downtrend. But these kind of and the EV adoption in the last few months has been very slow, and the adoption of fossil fuel is going very slow because of the low crude oil prices. If the crude oil prices are going to skyrocket, there is alternative energies are available on a longer term basis. So right now, this balanced view is there at this point of time. But any kind of these unexpected supply chain disruptions and supply disruptions are concerned, those are going to create short term spikes. So if the Middle East issues get resolved within a couple of weeks time, definitely crude can come back to again its original rate around $60 per barrel.
Sure.
But any kind of disruption in the Strait of Hormuz, definitely it's going to create some kind of a disruption in medium to short term. So one need to be closely vigilant, observing the things, and we need to acknowledge that in the last 10 years, India is the key beneficiary because of the global low crude oil prices.
All right, fair enough. Of course, so India has been a beneficiary, but a lot of ifs and buts and whethers or whether nots when it comes to assessing where the oil story is going from here. But Kranti, I want to focus on oil marketing companies because the government has said that there is going to be no increase in the sticker price of petrol and diesel. But with elevated fuel prices, even though they've cooled down from yesterday's highs of 120 to about $87, $88 a barrel right now, the profit margins of oil marketing companies are likely to stay squeezed. So what should be the strategy for investors who are parked in the oil marketing company story?
Definitely in the medium to short term, any elevated crude oil prices, they're going to have impact on the oil marketing companies especially, but some kind of solace can come. The 20% blend of ethanol can give some kind of a comfort to them in the medium to short term. But definitely any increase on the oil prices and if the OMCs, oil marketing companies, are trying to absorb this increase of the crude oil price, definitely it's going to have impact on their earnings in the medium to short term. But everything depends upon how the crude oil is going to pan out in the coming weeks and months.
All right. Also talk to us about, the fact that the government has said there's no shortage of ATF, but airlines are obviously, restricted in their flying routes, especially outside of India. We've seen the Indigo stock also get hammered over the last few days ever since the war in West Asia broke out. How do you see Indigo from here? I'm asking you for a stock-specific, for a change of stock-specific reaction this time.
Karthik, all these aviation companies, they work on a very thin margin. Any kind of spikes in the ATF fuels are concerned, it's going to have impact on the aviation companies in the medium to longer term perspective. And it is going to be a double whammy for Indigo. It's just recovering, and the increase in the oil prices, definitely it's going to have a impact on the margins. And also, it's going to create impact. Any kind of demand and demand situation is arising because of the increase in the airfares. Definitely, it's going to have impact on the entire supply chain management of aviation industry. Specific to Indigo, in the medium to short term, any increase in the ATF prices, definitely it's going to take a toll on their margins in the medium to short term perspective.
Right. And one more stock-specific question this morning. Adani Ports, what do you make of that, given that, of course, Haifa, the main port which sort of connects Israel, the West Asian sort of entire geography to Europe? Obviously, in the line of conflict directly, how do you make of the Adani Port story? Is it a good time to perhaps, buy some Adani Port stocks, or on a day like today where the stock is up, perhaps, just sit on some profits?
One thing, the Adani Group shares are highly volatile and they're the high beta stocks. So investors who have high risk appetite only, one can chip in into this group stocks. But Adani Ports, they have a strong infrastructure and one of the largest port operator in India, and their the Haifa port, it's going to have some kind of an impact because of the disruption in the supply chains in the region of Middle East is concerned. So if the investor have a high risk appetite, one can slowly add these kind of companies for a medium to longer term perspective. Short term, there kind of some kind of a extra volatility for these stocks are concerned.
Fair enough. Kranti Bateni, equity strategist, Wealth Mill Security. Thank you so much for your input. We leave it at that this morning. But as always, pleasure having you here with us on News 9.
Thank you.
And with that, we will slip into another very short break. When we come back, a lot of other global stories in and around, of course, the West Asia conflict for you. Keep watching News 9.
इन्होंने हेल्थ इंश्योरेंस नहीं लिया और हॉस्पिटल्स के लाखों के बिल चुकाने में अपनी सारी सेविंग्स गवा दी। और इन्होंने पॉलिसी बाजार से हेल्थ इंश्योरेंस लिया, जेब से एक भी पैसा खर्च नहीं हुआ और पॉलिसी बाजार ने कैशलेस क्लेम दिलवाने में इनको पूरा सपोर्ट किया। तो रिस्क मत लो, पॉलिसी बाजार से 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 525 रुपए महीने से शुरू।
Someone to bring your vision into reality. When human vision meets artificial intelligence, storytelling enters new territory. 2 distinct categories: brand films, short films, evaluated by the best of the best. Seen by those who shape the industry. Rewarded with a 10 lakh rupee prize pool. Celebrated at What India Thinks Today, Delhi.
AI Squared Awards, where artificial intelligence meets artistic imagination.
इस खेल में अब खेला होगा, हर नहले पे दहला होगा। टीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। साथ खड़ा है। गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap. Kick it hard in the booth. Chuck, there for the ball. Chuck there for the ball. Chuck there for the ball. Chuck there for the ball.
Welcome back. You're watching News 9. This is Morning Brief at 9. Well, US President Donald Trump predicted a quick end to the Iran war on Monday, telling US media the campaign was pretty much done. But in Iran, hardline supporters staged a show of loyalty to the country's new supreme leader, Mujtaba Khamenei, signaling Tehran is not ready to back down. Officials now say the White House is reviewing options to contain energy prices as the war continues to rattle markets. Take a look.
We're going to have a much safer world as soon as it's finished, and it's going to be finished pretty quickly.
U.S. President Donald Trump on Monday predicted a quick end to the war in the Middle East, even as Iran's hardliners staged a show of loyalty to new Supreme Leader Mojtaba Khamenei, in a sign that Iran was not prepared to back down anytime soon. The conflicting signals sent markets on a roller coaster on Monday, with oil prices surging and stock markets nosediving, before swinging back the other way after Trump told CBS News the war is, quote, very complete, pretty much.
We've already won in many ways, but we haven't won enough.
Earlier, Reuters reported exclusively, citing 2 people familiar with the matter, that Trump was expected to review options to tame oil prices, which soared to more than $100 a barrel on Monday due to the war against Iran. It comes as the White House worries that a surge in oil prices will hurt U.S. businesses and consumers ahead of the November midterm elections. Clayton Siegel is a senior fellow in the Energy Security and Climate Change program at the Center for Strategic and International Studies.
I think you're going to see that nationwide pump price average get close to $4 a gallon. That's painful for consumers, and it's probably also painful for elected leaders, the politicians.
The sources who spoke to Reuters about Trump's plans on condition of anonymity said one of the measures under discussion to bring down oil prices is a possible joint release of crude from strategic reserves, with counterparts from the group of 7 major economies. Other options include restricting U.S. exports, intervening in oil futures markets, waiving some federal taxes, and lifting requirements under a U.S. law called the Jones Act that domestic fuel move only on U.S.-flagged ships. A third source told Reuters that administration officials are also exercising diplomatic pressure on Gulf allies to help restore production and shipping of oil. In Los Angeles, the price for gasoline has risen above $5 a gallon, among the highest in the country. Siegel warns that the price at the pump might continue to rise.
Even if the current war in this phase draws to an end, we now have a new chapter of geopolitical instability in that really important region of the world for oil and gas supplies. I think it's going to be with us for quite a while, conceivably even through the rest of the term of President Trump's term.
Now, speaking at a Republican policy retreat in Florida, U.S. President Donald Trump said U.S. military action under Operation Epic Fury has stopped Iran from quickly developing a nuclear weapon. Now, during the speech, Trump praised what he described as strong U.S. economic performance, saying inflation is falling, incomes are rising, and the stock market has reached multiple record highs. Listen in.
In our country, inflation is plummeting. Incomes are rising. The economy is surging. Our border is the most secure at any time in American history. And the murder rate is the lowest in 125 years. If we didn't do that B-2 attack, Israel would have been wiped out. They would have had a nuclear weapon within 2 weeks after that. And even now, I think they were looking to take over the Middle East, because when you look, and we have pretty good proof, all of those missiles that were so stupidly aimed at Qatar, Saudi Arabia, UAE, they were all aimed, and others, at countries that were sort of like, leave us alone. They were all right. They were sort of neutral, but they weren't doing it. All of a sudden, they're getting hit with missiles.
And U.S. Secretary of State Marco Rubio defended Washington's strikes on Iran as the war continues to rattle global markets. Rubio said the U.S. attack on Iran was necessary to counter what Washington sees as a growing existential threat from Tehran. Now, his remarks come a day after the United States confirmed that a 7th U.S. service member had died from wounds sustained during Iran's initial counterattack last week.
I think we are all seeing right now the threat that this clerical regime poses to the region and to the world. They are trying to hold the world hostage. They are attacking their neighbors. They are attacking neighboring countries, their energy infrastructure, their civilian population. They're attacking embassies. This is a terrorist government. This is a terroristic regime. And we are seeing them conduct terrorism using nation-state elements, using weapons like missiles and one-way attack drones. And the objective of this mission is to destroy their ability to continue to do that.
Russian President Vladimir Putin said the U.S.-Israel joint war with Iran is triggering a global energy crisis. Putin warned that oil supplies moving through the Strait of Hormuz could soon come to a complete halt if the conflict escalates any further. The Russian leader was hinting at the oil prices sending shockwaves through global energy markets. Now, Russia, the world's second largest oil exporter and holder of the biggest natural gas reserves, said it is ready to resume long-term energy cooperation with European customers if they want to return for a deal. Now, Trump also urged Russian companies to take advantage of the current turmoil in energy markets, though he said the spike in oil prices could be temporary as well. France is stepping up its naval presence as the Iran war threatens global shipping routes. On Monday, French President Emmanuel Macron visited troops aboard the aircraft carrier Charles de Gaulle off the coast of Crete. Now, Macron said France's goal is to help secure maritime routes once the Iran conflict subsides, including escorting tankers and container ships through the Strait of Hormuz. Paris is developing about a dozen naval vessels to the Mediterranean, the Red Sea and potentially the Gulf region to support allies and protect shipping lanes.
There are risks of escalation that exist today. In any case, it's clear. There are risks of escalation geographically when I see that in recent days, infrastructure has been targeted, particularly desalination facilities, in addition to oil and gas production sites. So all of this shows that the situation remains extremely volatile. It's fragile. That's also why, beyond these strictly defensive missions that France carries out and to which it contributes with its partners, we want to coordinate things at the economic level. The goal, once these conflicts have subsided, would be to be able to escort tankers and container ships in a completely peaceful manner, and to reopen the gas and oil route out of the Strait of Hormuz to supply global markets, as well as the routes of container ships to supply many countries in the region that are currently experiencing shortages of certain goods or resources.
Now, Turkey said on Monday the NATO air defenses intercepted another Iranian missile entering its airspace. The incident highlights growing risks for Turkey and the NATO alliance as the war between United States, Israel and Iran continues to widen. Take a look.
Turkey said NATO air defenses on Monday shot down an Iranian ballistic missile that had entered its airspace. NATO's second largest army and Iran's neighbor warned that it would move against any such threats. Turkish President Tayyip Erdogan said the provocative steps risk jeopardizing Tehran's friendship with Ankara. Another Iranian missile was shot down last week before entering Turkish airspace. A witness described hearing a loud bang as debris fell on Turkish soil.
We were sitting at home and there was a bang. A part of the missile had fallen, but because it is a construction zone, we thought it was coming from the construction. When we looked out the window, we saw the excavator operator looking at the part.
A NATO spokesperson confirmed the incident and said that the alliance stood firm in its readiness to defend allies. Iran did not immediately comment on the matter. U.S. Air Forces are stationed at Turkey's Incirlik base, and there is a NATO radar base in Malatya province to the northeast that provides vital protection for the alliance. Turkey, an emerging leader in the global defense industry, lacks its own fully fledged air defenses despite development efforts. The country had sought to mediate U.S.-Iran talks before the air war that began 10 days ago.
Australia is stepping up military support in West Asia but says it will not send troops to Iran. Prime Minister Anthony Albanese said Canberra will deploy a military surveillance aircraft to the region and supply missiles to the United Arab Emirates. Now, the move is aimed at helping Gulf states defend themselves against what he called unprovoked attacks from Iran. Listen in.
This growing wave of dangerous and destabilising attacks from Iran puts civilian lives at risk, of course including Australian lives, of which there are more than 20,000 people based in the UAE. In responding to requests following a conversation that I had with the President, Mohammed bin Zayed, and other requests, Australia will deploy an E-7A Wedgetail to the Gulf to help protect and defend Australians and other civilians. My government has been clear that we're not taking offensive action against Iran, and we've been clear that we are not deploying Australian troops on the ground in Iran.
And shares of major global airlines fell sharply on Monday while airfares surged as the conflict between the United States, Israel and Iran pushed oil prices higher in intraday tanking. Now, the spike in fuel costs is raising fears of potential travel slowdown and even the grounding of some flights if the war drags on. Take a look.
Airfares soared on Monday as the US-Israeli war with Iran sent oil prices surging. And airline stocks took a battering too as fears of a deep travel slump and the potential for the widespread grounding of planes. Oil prices were trading more than 15% higher at levels not seen since 2022. That piles pressure on carriers already navigating tight airspace as travellers scramble to evade the Middle East. In Asia, airlines bearing the brunt of investor fears included Korean Airlines, which tumbled 8.6%, and Air New Zealand, which lost 7.8%. Underscoring that pain on the consumer side were jumps in ticket prices. Direct flights from Seoul to London on March the 11th with Korean Airlines leapt to $4,359. That's up from $564 7 days earlier, according to Google Flights data. Analysts say the impact of high airfares could limit travel demand for much of the year. Fuel is the second largest expense for air carriers after labour. It typically accounts for a fifth to a quarter of operating expenses. Some major Asian and European airlines have oil hedging in place, but US airlines largely stopped the practice over the last 2 decades. Data shows that since February the 28th, more than 37,000 flights to and from the Middle East have been cancelled. With airspace severely constrained, airlines have been forced to reroute flights, carry extra fuel, or make additional refuelling stops.
Rising oil and freight costs linked to the Iran conflict has put pressure on developing countries like Nigeria, Bangladesh and the Philippines. Higher energy prices are increasing import bills and threatening to push inflation higher. We leave you with that report.
As global oil prices spike amid the expanding US-Israeli war with Iran, it is sending ripple effects across the world, including in developing countries. In Nigeria, a fellow Kemi Ofili said she paid about $14 to buy 5 gallons of petrol on Monday. Before the war, she said, the same money would give her 6.6 gallons.
I pray God intervene in the war so that it will come to an end. So that, because this fuel scarcity or fuel increments now, it will affect everybody. It will make foodstuff to go up. A lot of things will go up. Transportation will also go up.
Fuel prices in Nigeria have climbed from about $2 per gallon in the last few weeks to as high as around $3.5 per gallon. In Bangladesh, universities were closed as the government tried to conserve electricity and fuel. Redwan Hassan Rifat is a student from Dhaka University.
Due to the fuel crisis, our university buses are also being shut down from today.
Early on Saturday, dozens of vehicles queued at fuel stations in Dhaka as the government imposed fuel rationing. Dhaka has kept sales at around half a gallon of petrol per day for motorcycles and up to around 2.6 gallons for privately owned cars. In the Philippine capital of Manila, about 24 activists held a protest on Monday near a petrol station, urging the government to regulate fuel prices. Modi Florenda, president of public transport group Piston, said jeepney drivers who earn an average of about $10 a day risk losing their income if fuel prices remain uncontrolled. Ahead of a significant fuel price increase, motorists queued at petrol stations. This jeepney driver says the price increase would directly hit the livelihoods of many, with the transport sector bearing the brunt of the higher costs. Officials warned that more hikes were likely if the situation in the Middle East continues.
This season, we're going to explore the unknown sides and destinations of Spain.
इस खेल में खेला होगा हर नहले पे दहला होगा भी बड़ा है स्टेज बड़ा है पूरा भारत साथ खड़ा है we are the tigers साथ खड़ा है we are the tigers गेम बड़ा है dribble like a rap pass setting up the trap kick it hard in the ball chuck there for the ball